Today's video is a web lesson and Market Owl dashboard tutorial combo. The focus is finding potential trading opportunities in the Market Owl dashboard. But even if you don't have the Market Owl, you may still find some of these ideas and concepts helpful to your trading. The first thing I want to do is get a quick sense of the overall market risk. Is it a risk-on or risk-off environment? Does it have a bullish or a bearish bias? Here are 4 things that I look at every day to get a quick feel for the market. I look at the futures. I look at the VIX. Is it rising or falling? I look at the US dollar. Is it rising or falling? Both can act as head or tailwinds for the overall market. I look at crude oil. Same thing, rising or falling. Many stocks in the indices are related to oil and the oil industry. So if it's falling and it's falling hard, it can act as an obstacle. And then I look at the NASDAQ, and then take a quick glance at the other indices. But these are the primary 4 things that I look at. I have the same information in the Quick Market section under Quick Risk and Intermarket. I can look at the VIX, the semis, which is an old school market indicator, the Dow Transportation and Dow Utilities. Then I also look at the potential headwinds I mentioned earlier, the dollar, as well as oil. I take a quick look at gold, which in the past has often acted as a safe haven when people feel less optimistic about the market. And then the 20-year Treasury bond. Combined, all of these give me a quick feel for the potential market bias. Everything in trading has to be put in context, including the quick risk analysis. I have to consider, what is the recent trend been? Am I seeing extremes in the market? It's possible that we've hit an extreme and I have to factor that into my analysis. The last things I look at are my portfolio and my primary watch list. How are they performing, positively or negatively? When I look at the portfolio here, I can see that most of it is negative. And by the way, this is not a real portfolio. It's just for an example. If the portfolio isn't doing well, that's providing some important information. It can tell me that either my timing has been off on my entries or my exits. Maybe I've stuck around too long. And it can also tell me about the general market. I want to quickly check my watch list long and short and see how far off I am from the buy points so that I don't miss my ideal entry. But before I jump in, I also want to see how's it performing for the day. And I can see that most of them are down, so maybe today might not be a great day to buy it. Maybe I might want to wait till later in the day when I see a bottom put in or something rallying, or wait for tomorrow when there's an upward bias. It all depends on your trading style. Maybe you're a breakout trader and maybe you're a buy on the dip or a pullback trader. So you have to follow whatever strategy it is that you're comfortable with and that you're using. How can I quickly find potential trading opportunities in the Market Owl? The first technique is a strictly top-down approach. Simply look at the indices and see which one has performed best since the open. You can compare and contrast percent change for the day from the open to get a real sense of whether you're seeing strength or weakness. You can see that IWM, while down for the day, has been working its way back up since the open. Even more significant is the Dow. It's the only index that's in positive territory for the day, and it's had the strongest price move up since the open. Not only that, it's near the higher end of the range for the day. The up-down volume ratio and the SMA information provide a little additional context. It gives you the means to look out a little bit further than just now. Right now I have it set at the 10 SMA. That's a daily simple moving average. Also, the up-down volume ratio can look back as many days as you want. I have it set for 5. The first thing I want to do is identify, are most indices rising or falling? Who's the leader and who's the laggard? Clearly the NASDAQ with QQQ as the ETF proxy is lagging and the Dow is leading. So I want to look for strength or longs in the Dow and shorts or weakness in the NASDAQ. So we'll start with weakness, since 3 out of 4 of the indices are down, and I'll look to the NASDAQ. I have leaders at the top and laggards at the bottom. So I'm going to look at the worst performing stocks in the NASDAQ 100 basket. And I'm going to scroll through my charts and see if I can find a small risk, falsifiable entry area. Taking a quick look at the laggards in the NASDAQ, we have 5 of them. Here's TOCM, and I'm just going to be looking for what I think might be a decent place to enter while also being cautious that they're not extended in price. When I say a small risk falsifiable area, what I'm talking about is if I were to get in here, and let's just go ahead and do that. Is my entry at a place where I can put a stop that is a small distance to wrong, that is at a falsifiable area that makes sense? Where if price exceeded it, I'd have to question, am I wrong about this short? Where am I wrong about the trade? That's really all it's answering. In addition to, how much am I willing to risk? So here, there's a small consolidation, and I would be able to put a stop right about here and feel good about it. It's not a big loss. In fact, I could probably go a little bit tighter. It's roughly 20 cents. That's pretty good. I look at the others. I'm looking for smooth trending price action. I'm looking for consolidations. I don't want to see a lot of herky-jerky whipsaw price action. I also need to be cautious that it's not severely extended. One way you could do that is understanding and knowing what the average true range of a stock is. If price normally moves $1 and price has already moved $2, it might be a little extended. Or there could be some driving catalyst that you want to investigate. Next, we move on to the Dow stocks. And we're going to look at the leaders since the Dow is strong today and leading the market. The A, it's actually got a bit of a range going here. JPM, now this is a nice, strong, steady trend. It's above the 5 EMA, it's above the open. It's looking pretty strong, so this might be a candidate. I might wait for a consolidation or pull back to enter. This isn't showing enough strength for me. This is pulling back to the open. That might offer a low risk entry. One thing you want to do is you also want to go back and look, what has the trend been? How's the recent price action been behaving? This is another strong one. I like to put my strong ones together. So that is basically the essence of a top-down approach. You can do the exact same thing with the sectors. You come to the leading and lagging sectors. The leading are to the left, lagging are to the right, and everything that falls in between is in between. Again, I do the same thing. I just take the top 5 leading stocks of the sectors that are outperforming for the day, and I review the tickers and look for trade opportunities. I take a quick look at the financials, and they're looking very strong today, above the 5 EMA, above their open. That looks a lot like JP Morgan. So a lot of times a rising tide will lift all boats, and that can apply to not only the indices, but an individual sector. So these all look great. They look a little extended to me at this point, so I'm going to wait for consolidation. You know, it just all depends on your strategy and your comfort level. Then I work my way over to the industrials because they were also strong. And I just do that until I find something that looks good to me. It's a good idea to look at multiple time frames that are above or higher and below the time frame that you usually trade on so that you can get a full sense of price action. Make sure you're not entering extended, and make sure that you're entering at a place where you can put a small risk falsifiable stop. So that's the simple top-down approach based on a percent change from the open. Another top-down technique that's available is to utilize the top banner of each section, and you compare and contrast the relative strength and relative weakness changes from the open versus the advanced decline changes from the open. Again, along the lines of that concept of a rising tide lifts all boats, you can simply hunt for an indice or a sector or a market cap that has the most number of stocks showing relative strength or relative weakness, advancing or declining. Or if one of those categories is strongly outperforming and the whole basket is moving with it, you can look at the above or below average volume numbers to help you zero in on a category that might provide the best opportunities for the day. The next technique is simply to compare and contrast percent change from the open for each category against each category. For example, I look at the NASDAQ and I look at the percent change. The most is 2%. When I go to the S&P, I can see that there's a higher percent change range. That's stronger. I can do the same with weakness. If you're someone who's looking for the absolute strongest potential moves, this is one technique that you can use. Don't forget to apply the same technique to your special watch lists. The third technique, which I touched upon earlier, is to look at the volume. But instead of looking at it in the banner, you can simply just look at it in the volume column. Anytime you have above average volume, it will be in bold and black. Don't forget to check your specialty watch list, and don't forget to look for large downside volume on stocks that are underperforming for potential shorts. A quick note, if you have any questions about the Market Owl dashboard, I've included a little help button. When you click on it, it will take you to the YouTube channel that explains all the sections on the Market Owl dashboard in greater detail. The primary focus of this video is to understand how to utilize the owl to find opportunities. A fourth technique is closing range. You can quickly look at the closing range columns and you can see the ones that are closest to 100% are near the top of the range. At first glance, that can be deceiving. If a stock has only moved 20 cents and it's at the top of the range, that may not mean much, but if it's moved a couple of points and it's still at the top of the range, that can be significant. And as the day wears on, if it's able to remain in the top of the range, that's really a sign of strength. The same is true for being at the bottom of the range. Anything closest to zero shows that it's not doing too well. But of course you have to look at it so you can have a sense of context. Stocks that are 75% or higher in their range will be bold in green. Stocks that are 20% or lower in their range will be bold in red to help them stand out. So you can just go review the charts of any of the ones that are bold and see if you can find some trading opportunities. If you have a range number that doesn't make sense, it usually means that some data has not been returned on one of the master sheets. It's no big deal. You can change your data provider, or sometimes it just means it needs a little more time to load before it can correct itself and give you the proper reading. It's possible that the page isn't calculating because you have the formulas set to manual. Just go to the Formulas tab, make sure it's set on automatic. If it is, you can also hit Calculate Now or Calculate Sheet, and that should force the formulas to calculate and give you a more accurate summary. So we covered a variety of techniques to find opportunities in the Market Owl. We had our quick risk assessment, the top-down approach of indices and sectors by looking at the percent change from open and focusing on the leaders and laggards. We did the percent change from the open, comparing each category to itself for the ones that are showing the biggest or the weakest move of the day. Looked at volume, looked at closing range, looked at the advanced decline and relative strength and relative weakness. And we also touched upon putting everything that we see into context with moving averages, up-down volume ratio, looking at the prior trend and charts. I hope some of you have found this information helpful. Thanks for watching and good fills, everyone. If you found my free educational materials helpful, I encourage you to make a donation to the Children's Therapy Center, an outstanding nonprofit organization that helps children with special needs. You can also give without actually giving by using Amazon Smile. Amazon Smile is run by Amazon.com, and a portion of your purchases will go to the charity of your choice. Simply select Children's Therapy Center, located in Kent, Washington. You can find more about the Children's Therapy Center on my website on the Principles page. You can also find links to CTC on my YouTube channel in the About section, as well as under every video that I produce. Also consider donating if you've had a great year in trading. Be generous, contribute, give back. Lend a hand to those in need. You can find more free educational material on my website. Under the Education tab, you'll find helpful podcasts, YouTubes, chat room information, book suggestions, webinars, presentations, and helpful resource links. There's information on lessons learned and psychology, trades made, a dedicated section to trading growth stocks, market information, helpful tools and discounts on trading services, information on XLQ, an Excel plugin that retrieves real-time and historical financial data, market and stock analysis. And there's an assortment of videos on my YouTube channel. All this information is for educational purposes only, and the goal is to help you build a solid foundation that you can expand upon. Our chat room is popular and a favorite for many growth stock traders. Take the time to build a solid foundation of understanding before you begin trading. Take the time to clearly define your setups, your entry triggers, your sell rules, and most importantly, have a thorough plan for risk management. The first step in that journey is learning. There are no shortcuts to successful trading, so take the time to research and to educate yourself thoroughly.